And when you finally get to that point, when you master yourself and you finally get yourself in that position where you know exactly why you're doing something, when you're going to do it, how you're going to do it, and defeat ain't even part of the equation. Like, you know that you're going to be successful. Once you finally reach that peak performance level, you're dialed in. There's nothing taking you out of that. No one can convince you that you aren't exactly where you're supposed to be at.
When it comes to legalized bank robbing, I'm the best.
I'm going long in this breaker here. I'll take that. Going long in the order block. Make sure to take a partial here. It's almost like it's random. Stop above the balanced price range. That's a breakaway gap. This fair value gap should stay open. It's a breakaway gap. This is a breakaway gap, but this fair value gap here will take us higher. And thank you very much. Just like clockwork. Here we go. Here we go. That for real now. This is the last public stream. I mean it this time. Last minute switch up. And this will be the last stream ever with that intro. Gotta drop the new one in 2025. It'll be way better. Happy Friday, everybody. Let's do this thing. Good morning. Good morning. It is a great morning. So, what's up, Tim? This one's public, Tim. I gotta wish the YouTube community a farewell and a happy 2024. We're not gonna stay long. I'm planning on staying on till 10 o'clock. Okay, so we're not going all the way till lunch. Just be on here for a quick hour or hour and a half. I said 10 o'clock. 10 o'clock my time, but we're gonna stay on till 11 o'clock. Tape read for a little bit. I'll go over some plans for 2025 for both the Discord and YouTube, and then we'll get out of here. I'm done trading for the week. December has been great. First half of December, it was all right. And then finishing the week with no losses. I think the last 2 or 3 weeks, no losses. So it's been really nice going into 2025 with good energy, good momentum. And here we have our last public stream for a while. So let's knock out some housekeeping things first. If you haven't already, check my community tab. Okay, I just sent out the whole schedule for 2025. Okay, the whole January schedule. Okay, an entire month. I'm doing specific things each day. So check the community tab if you haven't already. I have my live trading days on there. I have specific days when I'm dropping specific videos on YouTube publicly. The tape reading streams are not going to be every Monday like they were this year. Okay, so the public streams here on YouTube like we're doing now, I'm only doing these like twice a month. I used to do them around 4 or 5 times a month, pretty much every Monday of the week. But next year, I'm only doing these twice a month. So our next public tape reading stream won't be until... Let's see. Next tape reading stream will be January 13th. Okay, that publicly, the next live stream is January 13th. So it's going to be about 3 weeks till I'm back here. But Discord or back live trading January 6th, that Monday. All right. What else? I'll address more towards the end of the stream. But here we go. Let's go ahead and get this started. We're currently still in the opening range. We're going to go ahead and hop to weekly chart. All right. Current new week opening gap is here. Closest new week opening gap other than that one is here. I have one here, but we're not really in close proximity to any new week opening gaps just yet. So I'm not going to mark any of those on my chart. Let's drop down to a daily. Trading to the bearish order block here. All right, working lower, completely overlapping this fair value gap. And let's see, previous days, highs and lows for the last 3 days. We have a low here and a high here. Day 1, day 2, day 3. Okay, so this is key areas of liquidity. So I'm going to have that on my chart. And we also do have a new day opening gap, that small little separation. Trading beneath it just now. NASDAQ looking pretty heavy on the day. We also have another new day opening gap here. And then we're trading back inside of this daily fair value gap. Okay, here. So I'm going to annotate the high of this inefficiency and keep that on the chart as we drop down to the lower time frames. All right. Go ahead and take that off. And that's pretty much all I want for that. Let's go to an hourly chart. You can see us already looking very heavy. Okay, we don't have any news today, or do we? 1 p.m. news, medium impact today, but I don't really care for that. Okay, we have all this here as a balanced price range. Okay, if we work through mean threshold of all this here, then I'm convinced that we're likely to take out the sell side. But this back and forth, it's been efficiently delivered. We don't have any inefficiencies in this price leg. So if we continue to work through that, then I'm looking at sell side. I'm looking at this hourly fair value gap, the high of it as a potential draw. Let's go to a 15-minute chart. And midnight opening price is here. And 8:30 opening price is here. So on most days, if we're trading this far beneath these two opening prices, I would favor longs or a setup targeting that direction. Unless we're having a really trending day. Okay, whenever we're trading this far beneath the midnight open, either we're just going to have a trending day and we'll never return back to it, and we'll just continue working lower and lower and lower, or you'll see us return back to the midnight open and longs would be the move for the day. So I'm watching to see, again, that hourly chart. Do we have strength to get through this and continue to trend away from the midnight open? Or do we want to start working and repricing higher? We're still in that opening range, so if NASDAQ does want to go higher, this drop down in the first 30 minutes can be treated as a Judas swing. But we'll see what we're looking like when 10 o'clock gets here. 5-minute chart, and let's take a quick look at dollar index. Okay, here's the Dow, not looking as heavy as S&P and NASDAQ, actually working higher. So this is kind of canceling the idea that NASDAQ is going to have a trending day. Can that happen? Absolutely. But if Dow continues to look really bullish, clearing out buy side, and if S&P starts doing the same thing, then I'm convinced that NASDAQ, this drop down, can possibly be coming to an end, and it may want to match what Dow and S&P can possibly do, which is go higher. All right, so Dow, you have that. Dollar index, go to hourly chart. Dollar index to me so far looking bearish, staying in the lower half of this hourly fair value gap. We've taken out sell side, and obviously we have sell side here. So if dollar index stays looking bearish, then obviously I would favor higher prices in NASDAQ. I want to see us maintain that relationship, that inverse relationship between dollar and the indices. Breakaway gap slash measuring gap. I'm watching to see if dollar keeps most of that open. If we continue to work lower, then I'll be expecting to see some sort of retracement higher for NQ. Let's see. Let's look at gold real quick. I haven't looked at gold in a while. Hourly chart. Oh, that's clear as day. The sell side for gold in striking distance. Doesn't really get any better than that. Euro dollar. Okay, taking out a short-term high. We have relative equal highs here for euro. I'll be watching to see if we can reach for that. And I think that's it. Let's go to 15, 5-minute, 1 minute, and your first presented fair value gap is this 931 candle up here. Let's get some targets. Zoom out a little bit. I'm gonna get constant encroachment in all of this. So this fair value gap, I'm getting midpoint. If NASDAQ stays heavy, stays trending bearish, then I'll be looking at midpoint of this fair value gap as a draw, then possibly the low of it here. And then if we still want to get through that, we have a new day opening gap here. But again, I'll be watching to see what we do during the opening range. 60.75. Consequent encroachment. Daily, BISI, consequent encroachment. And then you have the high of it here, or the low. All right, I'm taking some of these off. All these lines are getting distracting. I'm also looking at this down close candle. So we had this displacement higher. This last down close candle, clear this off for a second. Last down close candle before the displacement, we're trading to the high of that. So I'm not going to annotate it. It's pretty much aligning with that new day opening gap. So in the back of my mind, I'm understanding that there's a potential bullish order block coupled with that we're trading into right now. All right, 1 minute chart. And what I'm watching to see is, does NASDAQ work the lower half of that fair value gap, or do we stay in the upper half, that daily fair value gap I'm talking about? Do we stay in the upper half of it and work higher if we fail to reach consequent encroachment? If we fail to reprice all the way to the low and we start moving away higher, to me that's bullish, especially on the daily chart. So that's something I'm observing. And then you already have the Dow doing this, foreshadowing that the other indices may follow suit and do the same thing soon. So I'm watching to see if NASDAQ and ES is going to look like this soon, especially with dollar looking bearish in my opinion. All right, let's look at the chat real quick. What's up, Alexis? W intro. Kirktown, I appreciate you. Do stocks daily percentage have a big role? I don't even look at individual stocks. I couldn't tell you. Couldn't tell you. Oh, man. It's been a great year, man. It's been a really great year. It's been a great year. Let me... What I'm waiting for is watching to see if we leave a fair value gap, a bullish buy side imbalance, sell side efficiency. Do leave a fair value gap and leave majority of it open. And then we have this CB here. I'm watching to see if we can get above that, use it as support. All my analysis is relying on the fact that Dow is looking very bullish. S&P is starting to follow suit just a little bit. And you have the dollar index looking bearish, looking like it wants to take out sell side. So if dollar is looking heavy, I want higher prices in NQ. And then you also have the fact that Dow and S&P are showing strength as of right now. And then you factor in our opening prices. We're way beneath the midnight and 8:30 open. And we're trading into discount levels on the daily chart. So, and we gap lower at the open. So here's our regular trading, or what is it, opening range gap. We open at 9:30 and immediately trade lower. So what is everybody doing right after the open? They're shorting. They're chasing it. So that's why I said the first 30 minutes going lower, I'm trading that as the Judas swing, because everybody's going to look to short this thing and chase it going lower. When in reality, in my opinion, we're already at a deep, deep discount. and other markets are starting to flip bullish. So that's how I'm interpreting things right now. And we have about 10 minutes till 10 o'clock. Okay, so we have our first fair value gap here. I'm watching to see, do we respect consequent encroachment? Do we leave a portion of it open? Okay, I don't want to see this entire fair value gap repriced in, meaning I don't want to see us do something like this. Okay, I want to see us leave a portion of that unfilled. That's a bullish signature that I like. Okay, that's not a signal, that's not a buy, it's just something I'm watching. I don't give out signals. We don't do that here. Also watching this fair value gap to see if we get used as an inversion level. We have a lot of factors here. This buy side imbalance, sell side inefficiency, this fair value gap, which eventually I like to see this be used as an inversion level. And then you have these 4 down close candles. As soon as we cross the opening price, okay, that's the change in state delivery. I want to see if we can keep this low intact and respect mean threshold of these 4 down close candles. Which will look, mean threshold is here. That's kind of like what I talked about in my trade yesterday. It's on the channel. ATM model was great. I haven't looked at Asia last night. I'm not sure what it did. Let's see. Asia. That's a nice sell-off. Yeah, that was nice. Clearing out your highest high after 6 p.m. Relative equal highs, breaks lower. This probably looks cleaner on like a 2-minute chart. This little retracement, you can short that little liquidity void. 2-minute chart, you have volume imbalances in here. 3-minute chart, volume imbalances. But that is nice. Three trading days left. ICT can still win the Robbins Cup. Tapping the high of that daily fair value gap. Two-minute fair value gap here as well. So now we completely overlap this fair value gap. Not what I wanted to see. To me, that's not as bullish as I would like. The fact that we completely overlapped this buy side balance, sell side inefficiency. But my eyes are gravitating towards this now, this inversion fair value gap, just looking for areas of support. But the fact that we didn't leave some of this open, this is telling me that NASDAQ is possibly still weak. So I don't see any signatures in the chart right now that says bullish. Nothing that I like to look for, at least. The Dow is really strong. Like the Dow is likely to take out these equal highs. I don't want to have too much on my chart, but I am looking at this. But there's nothing in the chart. What I like to see normally is we get a nice close above the inversion fair value gap. The next candle opens, trades down, uses it as support, and then we rally. So far, we haven't gotten a decent close above it. Okay, trading to the high of the new week opening gap. We've completely traded beneath this fair value gap. I wanted to see a portion of that stay open. So there's no signatures in price right now that says we're ready to go higher. And if this was a live trading stream, I'll simply be waiting for something that I like. crazy facts. I appreciate that. I'm doing good. On trending days, it just all depends on the daily and weekly chart. Daily, weekly chart, and an economic calendar. But you don't have to predict trading days. You can, if we're trading away from the midnight open and price is clearly looking heavy and it's violating all the discount PD arrays and it's just trading lower, then you can assume that's going to be a trending day. But you don't have to be able to forecast it in advance. Can you do that on some days? I believe you can, but it's not required. You can show up to the charts at 9:30 and just say, okay, we're likely to have a really one-directional day. I forgot to put my thingamajiggy up here. Let's put it here. Oh, did not pin. Price trading to that old new day opening gap. Body's respecting it. Still waiting for, well, let me say, as far as anything going higher, it's not in the chart right now. For me personally. Now, a bearish tier 2 scenario would be shorting above the midnight and the 8:30 open. Remember, this new day opening gap is laying right on top of that order block on the daily chart, the high of it. I don't want to keep all this on my chart, but just for visual reference. Okay, again, this last down close candle here before the rotation higher, the high of it. I'll just make it bold. It's pretty much right there. Yeah, as far as bullish, it'll be tier 2, yes. First fair value gap is your 931 candle. We're in that macro, 950 to 1010, so I want to see if we get displacement. I would like to see displacement higher. That's what I prefer, just given the fact that we're at a deep discount on the day already. But again, I'm not forcing that idea. I'm not married to that idea. What's up, Tim? You didn't miss nothing. Just chilling. What's up, Unicorn Queen? I'm still watching the upper half of this daily fair value gap, so I have the high, consequent encroachment, and the low. So far, we've been working in the upper half. So I'm watching to see, do we maintain that or do we dig deeper into that daily fair value gap? If we work below midpoint and lower, to me that's telling me that price is still really heavy. But if we're just spending time in the upper half, that's fine. Something I'm observing. So now we've taken out that low. I'm watching this down close candle. Should NASDAQ trade back above it, or back to it rather? You have a high, low, higher high. Last down close candle in between two highs. Treating that as a bearish breaker. Again, there's nothing in the chart that suggests we're going higher. None of the signatures that I like to see in price were present. Bearish order block sends us lower. So we're about to form a fair value gap here. Since NASDAQ still looks heavy, preferably at this point in time, I'd rather not see the breaker traded to, and I'm treating this fair value gap as a possible breakaway gap. I'm outlining all the bearish PD arrays until I see something in the chart on NASDAQ that says we're likely to retrace higher. Obviously, I'm not going to force the idea that we're going higher, but this fair value gap, treating that as a breakaway gap, and I'm looking at consequent encroachment. Whoops. Let me see. So I'm watching to see, do we leave this fair value gap open, or at least the upper half? And the reason why I prefer not to see the breaker traded to, because the breaker is resting in the upper half of the fair value gap that I want to see stay open. So when we're trading down like this, I would have liked to see the next candle open, hit the breaker, take us lower to the low of the daily fair value gap. But now that we have the narrative of this breakaway gap, I'd rather not see the breaker traded to. This fair value gap here, though, I'm watching that if we can use that as resistance. But I want to see majority of this stay unfilled. But this is the one that should be used to take you lower if we're really bearish. Yes, I stream every day in the Discord. I only come out here on YouTube publicly if I'm tape reading, like just watching price. We're not pressing buttons. But as far as actually live trading, my live account and pressing buttons, seeing my entries and all that, that's only in the Discord. But our last trading day was yesterday. We caught a nice win on stream. I already posted that execution on YouTube. But yeah. Taking a break off, or taking the week off from pretty much all next week. I'm not looking at the charts till Sunday, January 5th, see what we're trading at, and then January 6th, I'm back live trading for the Discord community. Right. So far, everything in the chart still says heavy. The breakaway gap stays open. Okay, this is the fair value gap that you'll like to see take us lower, be used as resistance. Don't want to see the breaker traded to at this point in time. Now, should NASDAQ get above this fair value gap and do something like we did here, where we talked about this buy side imbalance, sell side inefficiency, and we completely overlapped it? What did that tell us here? Because this is insight right here. Okay, if I'm bullish, I want to see a stab in this fair value gap, leaving some of it open and then run away. But the fact that we did what? Completely overlapped it, laid a body over it. This is telling me that NASDAQ is still heavy. Okay, that's like the algorithm, ICT describes it. The algorithm kind of showing its hand that it's still bearish. Okay, it's not respecting that discount PD array. So in this instance, if NASDAQ were to do what? Trade all the way up, completely overlapping this fair value gap that I want to see be treated as a breakaway gap. If we do that, that's telling me that NASDAQ isn't as weak as I would like to see it, because preferably you want to see this thing stay open. So if we were to do something like that, well, that's not really bearish now, is it? Below the daily fair value gap. And I think that's the last target I had. Let's get some more targets. NASDAQ's looking pretty heavy. So we have another new day opening gap here. We're trading to this fair value gap now. I really don't like having all these lines on here. It looks nasty. But I'm going to mark the high, whoops, and the low of this inefficiency. And then consequent encroachment comes in at 47.50. 47.50. Right there. All right, so more targets in case NASDAQ wants to continue working lower. Back to the 1 minute chart. Tapping that new day opening gap where I actually just fell short of it. The high comes in at 566. The low on this candle, 566.25. So missed it by a tick. So whenever we have, because this is important, if I'm trading a day like today, I'm sacrificing that first entry. A lot of people may look to buy this first fair value gap. I want to see this first fair value gap stay open, be treated as a breakaway gap, or at least I want to see the lower half stay open, and then I want to see us rally away, and then I'll see and look for entry up here. So if we're bullish, if NASDAQ does something like this where it only trades a consequent encroachment and then it works higher, okay, I'm forfeiting that entry. I want to see this happen first, and then I'll look for something to go long here. So I'm waiting. I want the algorithm to show me that we're bullish, show me that we're unwilling to completely trade down to the low of the fair value gap. If you show me that and then we leave, then I'll take a buy. So I always use these fair value gaps for insight. Okay, in the streams on Discord, we always highlight these fair value gaps in gray because I'm seeing it as a potential discount array, but it's just something I'm observing. Let's take all this off. Why do so many people bash ICT? Because he's one of the best to ever do it. When you're the best, and you prove it, a lot of people don't really like that. Did you catch the trade down? I'm done for the month. I only live trade in Discord. I'm not trading this today. Why didn't you short at open? I'm not trading today. I only trade with the Discord community, and we're done for the week. We had a great week. We captured 60 handles. Yesterday's trade, it stopped. I took off 3 partials at the buy side, and then I trailed my stop. I locked in like 20 handles or something, and then it took out my partials that were stopped in profit, and then it literally swept that low and rallied to my next partial. But it's all good. I'm sure somebody in the Discord didn't trail the stop as tight, and they capitalized on that. But we're done for the week. Done for the month. Done for the year. Was that the first $1,000 trade? No, the first $1,000 trade, that was a couple weeks ago or last week. But I posted a new trade yesterday. The trade I took on yesterday on stream is posted on the channel. It was a silver bullet setup. It was like 60 points, which is all right. So this looks a little confusing, but this is the low of that larger fair value gap, and then this is the high of the second one. Okay, between these two price points, that's not a separate fair value gap. Why don't you trade on a prop account? Live funds, baby. Everybody knows prop accounts. It's not for me. Plus, I don't really need it per se. How much is Discord? All the Discord pricing, features, things included, all that stuff. It's the link is pinned in the top of the chat room, or you can click the link in the top of the description. But 2025 is going to be great. 2025, I'll have my first $5,000 trade. I'll aim for my first $10,000 trade. It's going to be crazy. It's going to be a lot of fun. All right, so we trade up to the bearish order block. Okay, still everything in the chart is looking bullish as of right now. Or no, not bullish, bearish. Bearish. So now what I'm watching is we have a bearish order block here, and then you have this up close candle trading into the bearish order block. So I want to see if this is used as propulsion. Really, it's these two consecutive up close candles. Okay, an order block. Inside of an order block is a propulsion block. I'm watching to see if that sends us lower into the new week opening gap or new day opening gap that we never touched. Consequent encroachment of that fair value gap, and then the low of that fair value gap. If we trade to all that, then we'll go back to daily chart and get more targets. So I'm watching this here. New Year's goals lined up already. I got them. I'm ready. All the goals, all the visions, all that ready to go. Ready to go. 50K subscribers next year. 50K by the end of the year. That's the goal. The goal I have for this year, for 2024, I wanted 1,000 subscribers by the end of the year, and I did like 11x that, or 12x. So I lowballed myself this year, only aiming for 1,000 subscribers. So next year I'm going for 50K. 50K, even that might be lowballing, but I'm aiming for that play button. We're gonna get that YouTube play button for sure. For sure. So we're working that propulsion block. Again, just highlighting all the premium arrays that can be used as resistance until I see something in the chart that says we're bullish. For now, I'm just looking at all the order blocks, the SIBIs, the bearish fair value gaps, things of that sort. I'm just trying to get my play button. I'm working towards it, man. I'm thinking by let's see, we're going to be 2025. Within the next 3 years, I think I could hit 100K subs. So by 2028, the end of 2028, I think that YouTube play button should be at my doorstep. this. Hold on. This has to be really, there you go. That's better. Wait. Okay. Will I trade? I'm taking next week off. I won't even be looking at the charts next week. I won't be looking at the charts till January 5th. Well, probably like January 4th. I have the private mentorship starting January 6th, that Monday. So I'm getting ready for that. But no, I'm taking next week off. We already had a great month, a great year, and I don't want to be glued to the charts around New Year's. I gotta give myself a break. So everything bearish. Okay, we talked about the inversion fair value gap that wants to be used as resistance. We talked about why NASDAQ was still heavy, simply using this fair value gap and its entire range. Okay, completely overlapping that. That's telling us we're still bearish. We should not trust that as a buy. Okay, I'll highlight this breaker. I said I want to see that be used as resistance. But once we form this breakaway gap with this candle closure, we said I don't want to see the breakaway gap traded to, because once this candle closes, you don't want to see this fair value gap traded to, and the breaker, this down close candle here, is resting in the upper half of the breakaway gap. See that? So if price were to trade up, let's say this candle opened here and traded all the way up to this fair value gap, all the way to the breaker, that's not what I want to see. Okay, forming the breakaway gap, we said we want to see that stay open. We formed this fair value gap just beneath it. We said that's the one that we want to see take us lower, expecting this not to be traded to, expecting the breaker not to be traded to. Takes us lower. Bearish order block, propulsion block. Okay, we talked about that. That should be used as resistance. An order block, which is these two up close candles. An order block, inside of an order block is a propulsion block. Okay, taking the low of it, drawing it through. Opens, hits it to the tick, and you get this here. Now we need more targets. Back to the daily chart we go. Let's see. All right. You know what? Next target for NASDAQ today, all the way down here. Let's go. Nah, I'm just kidding. Imagine. A bomb got to go off or something for that to happen. But we've seen some crazy stuff already. Close, open. Okay, we have another new day opening gap between that candle's close, that candle's open. And then we have a new day opening gap between this candle's close, this candle's open. Let's go to an hourly chart. Okay, we have sell side. Oh my gosh, my chart's starting to look like. Never mind. I gotta stop name dropping. Let's see. Can't really take anything off. We could take off consequent encroachment of these levels. Trending day. Okay, if we're this far beneath the midnight 8:30 open, we're either going to have a really trending day, not just a regular trading day, but it's really going to be trending really heavy, or you're going to see us reprice to it. So this is a day where it's just really trending one direction. I promise my charts don't be looking like this. This is crazy. We can go ahead and clear all these off. That should be fine. I'm looking at the sell side here. All of this was a balanced price range. We talked about that. Okay, if we were to eat through midpoint, okay, that's telling me that price is really heavy, and we're working through all of that pretty much, aiming for the sell side. So looking at the sell side, and then you have the hourly fair value gap, and then that old new day opening gap here. Back to the 1 minute chart. Let's see. Breakaway gap, I have videos on my channel about breakaway gaps. Is 8% recoverable? Absolutely. Absolutely it is. I binge watch all your videos this weekend instead of Squid Games. Watching my videos instead of Squid Games, I am honored. I'm honored. Alright, trading to the low of that daily fair value gap. We have a small little inefficiency here, but I already know it's going to be a little cleaner on the 2-minute chart, so I'm going to opt for a 2-minute fair value gap right here. And same thing that we talked about on the 1-minute chart, just measuring bearish order flow. Do we leave this fair value gap open? Do we respect the lower half? So I'm going to draw this here. Label it consequent encroachment. You see we're already digging above that. And let's transpose this down. Let's do all of this actually. Squid Game. I'll pick Squid Games too. Shoot. No, the new Mr. Beast thing that's on Amazon Prime is actually pretty good. It's pretty good. Beast Games. Okay, so we're completely above that civvy. Let's see. How do you advise someone who's struggling to be disciplined in both life and trading? Well, it carries over. I always tell people how you go about life, it translates to trading. So if you're not disciplined in your day-to-day activities, you can't expect to come into the market. Okay, we're going to have to finish this lecture later because I got to go over some things, come see some things in the chart. I'm going to come back to that. Let me write that down real quick. Write this. I have a notepad in front of me. All right, so I'm looking at the same thing. I'm gonna take this off for a second. We have a fair value gap here. The same thing we talked about with this fair value gap. I'm watching. Do we leave a portion of it open, which is what I prefer to see? Now we have this small little imbalance. Okay, for higher prices, I don't want to see that traded to. I want to see that stay open. It's also a balanced price range. It's already been efficiently delivered. Okay, you don't want to see that traded to. This fair value gap here, same thing we talked about with this one, how I said I'm watching to see if we can leave a portion of it open, or at least the lower half of it open. I'm using that same logic here. Do we leave the lower half open, or even just a small piece? So, zoom in real tight. We have this wick. Take off this new day opening gap. The high of this wick is right here. If we were to trade down, okay, NASDAQ just messed up my example. Never mind. Never mind. But this right here, for higher prices, I definitely don't want to see that traded to. Okay, we have this balanced price range. You don't have to know all this stuff, but it's in the chart. But your balanced price range from this candle's high all the way to this candle's low. If we dig through that, midpoint is mean threshold. Okay, if we trade beneath that, to me that's still showing that NASDAQ is heavy. Okay, bearish signature, we dig through mean threshold of the balanced price range. Bullish signature, we leave this fair value gap open. So those are the two scenarios I'm observing. No, NASDAQ's not letting me get my point across. And then we do have that hourly sell side if NASDAQ wants to work lower. So let's say today is a day I'm looking for longs. This fair value gap, me personally, okay, this is just, I'm speaking in terms of my own trading style. This fair value gap, oftentimes I'll forfeit that entry because I'm watching. Do we leave it open? Do we respect the lower or the upper half? Do we tap consequent encroachment and then struggle digging lower? So I'm forfeiting this lower entry. I want to see us use it as support, leave a portion of it open, trade higher, and then I'll catch something in that price leg going higher after seeing what I want to see here. It's too much on my chart right now. Let's take a look around real quick. S&P looking bearish, order block. The Dow, look at that, just fell short of his buy side, breaking lower. Now it's looking really heavy, when at one point in time it was looking really bullish. Could even get up above the relative equal highs. That's way too smooth. That's going to be a focus for me going into next year. But the daily chart is rotating lower, and if we peaked all-time highs, then that may stay in place for a while, but that's a little too clean. Dollar index working higher. Let's look at gold real quick. Gold, we outlined the sell side. Still watching to see if we can get there. These relative equal lows. And euro dollar, we outlined the buy side here. Just fell short of it. That's on hourly chart. That hourly chart here. And now we have like a triple top, even that's a little too smooth. Let's go back to the NASDAQ. I'm gonna do real quick a little journal entry, a live journal entry just for my personal study. I'm gonna share this on Twitter as well. People were cracking jokes on Twitter. I shared my model. It was a hypothetical trade example. I just wanted to illustrate my model visually. Okay, I didn't take the trade, which is why, hence, I said it was hypothetical. Okay, it was hindsight. But I use these little arrows to show like possible entries and exits to go short. I was not trying to imply that I actually took the trade, which is why I put hypothetical example, and then I put like exit arrows and all that. And people were like, this is a fake execution. This isn't real. You're a fraud. I'm like, my guy, it's just a journal entry. It's a hypothetical trade. It's not real. But anyway, this shouldn't take too long. I have like a lot of these little screenshots and stuff that I just like to go back and look at. This is how I journal. This is how I like to save a little bit of notes and stuff. And it's fun. I like doing it, so. Yeah, they don't know what hypothetical means. It's too big of a word for them, but it's okay. I know for next time. They're like, those are fake arrows. Those aren't real. I said, yeah, it's hypothetical. But yeah, definitely gotta opt for trade idea next time so I don't confuse the public. Price is trading to that fair value gap. Okay, to me, that's still showing signs of heaviness. You want to see that stay open. I would never see that fair value gap as a long entry. Okay, this is just my personal trading style. I would never see that as a long because this is the fair value gap that I would want to send price higher. And then we work through the balanced price range that's showing heaviness. So I would never look to buy something like that. I always say I want to see those stay open. When I used to trade optimal trade entry, I used to get cooked because I would be buying the 70% retracement. But now that I understand price action and just simple characteristics of price, now I have understanding that you don't want to see this traded to if you're bullish. And I used to always get cooked buying that retracement. When in reality, you don't want to see optimal trade entry in this instance if you're bullish. You want to see us displace fair value gap, work higher. A lot of people say, oh, you didn't buy in a discount, you didn't buy in a discount. They'll do things like this. They'll take this low to this high. Oh my gosh, my charts are all over the place. But they'll take that low to that high, get equilibrium, and they'll be waiting for price to come into a discount to buy. Okay, that's fine in some instances, but when you have the logic of a breakaway gap, I don't want to see that traded too. So if we trade down into a discount into that fair value gap, to me, that's just, we're just going to run that short-term low. In this instance, I don't want to see us trade to a discount. I want to see us work this fair value gap that's above equilibrium and then go higher. All right, let me finish my entry here. Journal entry, not trade entry. I'm dropping gems in this stream. I'm not gonna lie to y'all. This is good stuff right here. Couple more. Again, this is just for my own personal study, but I do share it publicly on Twitter after the stream. Whoops. Oh my goodness. Get your stuff together. these off. This off, take this off. I'm very like particular with my arrows and stuff. I can't help it. Right there. And I think that's good. Take a screenshot of that. And then I save that in a folder on my laptop. I upload it to my Google Drive. And then I also share it publicly on Twitter so people can see how I kind of journal and annotate things. So let's take all this off now. All right, back to business. Looking for that hourly sell side in the crosshairs. And we also have the high, this hourly fair value gap here as a draw. And then we have the sell side resting inside of an old new day opening gap, which I think we have a new week opening gap as well that we're bouncing off of. This chart gonna be messy, my goodness. It's not that bad. 5 minute. All right, let me read the chat. I was a little too locked in. Yeah, Twitter's crazy. It's still toxic, but I'm starting to like it because Twitter is a nice platform to just like share things, share charts and analysis and whatnot. It's a good platform. It's just the trading community is toxic, and the platform as a whole is toxic. Like I don't follow anybody on Twitter. Why do I go to my homepage and there's people getting shot and stabbed on my homepage? I've never liked any of that content. Why is that getting recommended to me? And to be having like 60 million views, like I don't want to see that. It's ridiculous. Like as soon as I open Twitter, it's either some trader talking mess, being toxic, or somebody's like getting killed. Like it's ridiculous, bro. Top-down analysis, time frames, weekly chart, daily chart, 15-minute, 5-minute, execute on the 1 minute. If you got inside the second CB, your stop. If I'm trading an entry like this, my stop loss is above consequent encroachment of the breakaway gap. So that's a good question. If I was taking that short, we said this is the one that should take us lower. Don't want to see the breaker traded to. Don't want to see this completely repriced in. Okay. Entry at the low of the fair value gap. Whoops. And then I'll take this breakaway gap that I want to see stay open, but I'm allowing price, if we do wake up into it, I'm allowing price to work in the the lower half of the breakaway gap. So this is consequent encroachment. My stop loss is going above that, but give it a little bit of breathing room. So it'll look something like this. Okay. Best case scenario, you want to see what we did here, which is completely leave it open. But if price wicks up, okay, you still want to see it respect the lower half of the fair value gap, because breakaway gap shouldn't be traded to at all, especially not the upper half if you're bearish. So it should. You're allowing price to do something like this. So that's how I would trade it. Twitter toxic. It's toxic. Like I feel like it doesn't matter what post I like. It's still it's crazy. I don't follow anybody, so it's like it's like I'm not seeing retweets of people like retweeting certain content, and then that gets pushed to me. Like it's just Twitter pushing toxic stuff to my feed. So I don't even look at my homepage anymore. I just post my chart. I post a market review. I respond to a few comments, and I just close the app. Whoops. But yeah, it's toxic. I have to get out of here soon. Right after the stream, I'm headed to San Antonio. Me and my girl, we got a nice hotel on the Riverwalk, celebrating her birthday tomorrow. And we're gonna wrap this up at about 11, maybe 11:10 if the macro gives us something nice. But gotta finish packing a few things, and then hitting the road. It's about a 2.5-hour drive. So I'm excited for that. Do you trade market maker sell model? I do. I take trades, and half the time I won't even realize it's a market maker sell model until I look after the fact. I'm like, that short I just took was a sell model. But I just posted a trade recently a couple weeks ago. It was a PM session short, and the idea was based off the market maker sell model. Chill, I know. This is the last one of the year for real. Going to a Spurs game? Nah. They're having like an Alamo Bowl. The Colorado Buffs, Deion Sanders and all them. They're playing BYU on Saturday. But nah, she's not really big on basketball. She's a football girl. All right, so same thing with this fair value gap. We didn't get it here. Okay, do we leave a portion of it open? We completely overlapped it. That's telling us what? Still bearish. We talked about that small little fair value gap. Do we trade down, leave a portion of it open? No. What do we do? Completely overlapped it. What does that tell us? Still bearish. This fair value gap I'm watching so far. Okay, we open, traded down, institutional order flow entry drill, leaving majority of that open. That's a bullish signature. So I'm watching to see if that remains the case, leaving majority of this fair value gap open. And do we continue to work higher? We're also in that 1050. Well, not yet. We still have about 6 minutes, but that 1050 to 1110 macro typically brings a retracement. It typically runs on liquidity, all the trailed sell stops above this high, trailed sell stops, or no, buy stops, sorry. Buy stops, trailed buy stops, trailed buy stops, trailed buy stops, okay? And they're permitted to make money all morning until we get to the time of day, London close. You're likely to see a retracement, likely to see us take out a short-term high. Now, let me drink some water because I'm over here yapping. A lot of times what will happen is if we're having a day like today where we're really trending, really bearish, a lot of times what you'll see is during the London close macro, we talked about this in the last tape reading stream, but a lot of times you'll enter that 1050 to 1110 window, and if we're really bearish, looking for sell side during that 20-minute window, you'll see us run out a short-term high like this high or this high here. We'll run that out during that macro and then continue lower towards our objective that we're looking for prior to the macro. Okay, that's if we're really, really trending like today. It would just be a sweep. Okay, now let's go. Now that we knocked out traders and their trailed buy stops, it resumes the move going lower, kind of like the lunch trade. Any other day that's not trending, you're likely just see a retracement or a full-blown reversal as you get closer to 11 o'clock. But a retracement as we're approaching 1050, it happens a lot, almost every day, to be honest. But so far, as far as bullishness, this is a signature that I like to see. The fair value gap, do we leave majority of it open? Absolutely. Now I'm watching to see, we've already swept that high. But I'm looking at all these buy stops up here. I'm watching to see if NASDAQ wants to knock that out. CRT, no sir. No sir. Those, we don't mention those words in this chat room. Absolutely not. How do you feel about the Travis Hunter situation? Man, listen. 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 I don't know, man. I don't know. For all the football people out there, well, it's not even football. Like, it's got blown up. Like, people who don't even watch people who don't even watch people who don't even watch football are, like, aware of the whole Travis Hunter and his girlfriend thing. Man, for one, I think people need to stop getting out of that man's business. Like, they're finding all this old footage of his girl. Like, these people probably got no jobs. They got nothing better to do, but they're searching the internet trying to find dirt on this man's woman. Like, maybe if they spent that same energy taking care of their own woman, if they got one, they'll be a lot happier in life. But I've never seen people so fascinated with another man's woman. It doesn't make sense to me. But as far as Travis, I mean, that has nothing to do with me. But definitely, if I was him, get that prenup for show. Just gotta play it safe and protect yourself. That's all you gotta do. But yeah, people so worried about that man and his lady. It's crazy. So we trade down to the fair value gap. Again, leaving the lower half open. That's what I like to see. Let's make this a little darker. All right, we have about 2 minutes till that London close macro. Let's take all the premium arrays off because now, who's been making money all morning since 9:30? Clearly, everybody who's been going short. Okay, where are their stop losses trailed? Above the highs, above the highs, above the highs, above the highs. What time can you expect us to run against all those trailed sell stops? 10:50 to 11:10. So we've already taken out this high here, which is fine. Okay, if we're really trending, a lot of times you'll see us take out that high and then continue lower. But I'm watching to see if NASDAQ wants to run out the buy stops above this high. And then we have this high here. I'm not really focused on that one, but this buy side really has my focus. I'm watching this down close candle, bullish order block. I want to see if that can be used as support to send us higher. That's also in close proximity to the low of that daily fair value gap. But for now, in my opinion, this isn't enough. Like, yes, we traded above this high with that wick, but in my opinion, all we did was just generate relative equal highs. So I'm drawing it like this. Let's see. This long wick is also a bullish breaker. That long wick here, you have your low, high, lower low. Okay, this long wick, using that as a breaker, draw it all the way through. We have a fair value gap resting inside of the breaker. And then you also have this down close candle, which again, I'm treating that as a bullish order block. I want that to spike us up into the buy side. It's 10:50, so I'm expecting speed during this 20-minute window. Okay, now we're in the time of day where I like to see us run on that AM session liquidity. I know you called your expectation out beforehand, but in a case where you don't fall or see some price, do you do this journal? You called your expectations out beforehand. Do you do this journal? Yeah, if I have a bias and I'm offside, then that's more meaningful. That's what I like right there. Buy stocks, okay. Traders who've been making money, I'll delete this as well. Traders who've been making money shorting, okay, that's fine. They can short, they can profit here. They're going to trail their stop losses here, trail their stop losses here. We break lower, trailing their stop losses here. That's fine, trailing their stop losses here until we get to 1050. This candle is 1051. We run out relative equal highs, okay? And now I'm watching to see, this, in my opinion, is enough for the London close macro. Because we're in a trending day, we talked about earlier, a lot of times what you'll see is we'll take out minor buy side, knock out traders who have trailed their stop losses here, and then we'll continue lower towards our objective. So this for me is already enough for the London close macro. Anything higher, this buy side, that's fine. We're just knocking out more buy stops. And I'm going to work on one last journal entry for the year. Last journal entry of 2024. How about that? Let's see. Let's do it like this. Trying to figure out how I want to word it. I don't know if this is boring for y'all to watch, but I mean, this is how I improve as a trader. This is how I like to study and keep logs of certain things. Like I said, this is something I do off camera as well, but I do like sharing it on Twitter and the public every now and then, just live annotations. Let's see real quick. Let's see. Almost done. I want to see if we have the willingness to reach for this buy side first before I take my screenshot. Gotta double click, make sure there's no typos, because typos drive me crazy. Oh my gosh, come on. There we go. All right, I'm gonna stay on till 11:10. I just want to see, like I said, this right here is enough of a buy side run. We already talked about if we're really, really trending on the day, this is all it'll do. It'll run the buy side, take out a short-term high, and then it'll continue lower towards your objective. So the macro has already done its function of knocking out traders. I'm just waiting to see, do we want to reach for this here? But that is not required. We've already knocked out the buy stops, and we created relative equal highs and swept all of that. Chat time. Let's see. Cool. At what time do you usually start looking for trades? I prefer to be done by 11 o'clock. Really, 10 o'clock to 11 o'clock is my sweet spot. I'll enter trades up until 11:30, but 90% of the time I'm done trading by 11 o'clock. Most of my trades occur around like 10:20, 10:25-ish. Am I going to tweet this? Yeah, this is going to be on Twitter. Twitter is also like my digital journal. Like I share little case studies, the market reviews. I go on Twitter, load up the previous market reviews, and I like looking at my screenshots and executions. So Twitter is like my personal journal as well. We're pushing 11. I think I'm going to go ahead and save it like this. I could wait 10 minutes. I got to hurry up and get packing, but I want to stay on. We'll stay on until 11:10, let the macro finish doing its thing. And I take all these levels off in my screenshot because I'm only really focused on price. This is that order block I was looking at. We said we wanted to see that be used as support. It was combined with the fair value gap. That's nice. We trade down into it. Takes us up into relative equal highs. If you pull this up on like a 5-second, 50-second chart, this buy side is going to look a little bit more smooth, but that order block, buy side, nice. Oh, my bad. Appreciate you caught that. Yeah, knocks them out of their shorts. That would have drove me crazy if I posted that. Knocks them out of their shorts. Yes, good catch. Good catch. See you, Colton. Oh, yeah, discipline. Okay. I'm glad you said that. So somebody asked, how do you be disciplined in trading and in life? So, like, I always tell people, when it comes to trading discipline, you can't just walk in the market and just be disciplined. It starts with how you live your everyday life. So you can't just be undisciplined. If you say you're going to go to the gym and you don't go and you do that on a consistent basis, you're not disciplined. You can't keep your own word. If you say you're going to eat right and you don't, and all you eat is junk food and fast food and chips and cookies and cake, you're not disciplined. You can't even take care of your own body. If you say, you know what, I'm going to study for 30 minutes every day, or I'm going to study for 30 minutes twice a week, and you can't even do that, you're not disciplined. You can't even control yourself outside the market. So what's going to happen when you get in here and try to press buttons? If you're not disciplined outside the charts, when you get in here, nothing's going to change. It's just, I like how ICT describes it, it's just a mirror. Trading is a mirror. It's going to show you who you really are. It's just going to show you your own reflection. I use this analogy a lot. If you're in a relationship, whether you got a wife, husband, girlfriend, boyfriend, significant other, if you're not faithful to them, if you're cheating on your partner, what makes you think you're going to come in here in the trading industry and stick to one model? You can't even stick to one girlfriend. You can't stick to one woman. You can't stick to one man. It's not going to work. You can't be out here with 3 different girls doing sneaky stuff and you expect to come in here and only have one model. That's not how it works. How are you going to stick with the 2022 model, but you're out here cheating on your girl with 2 different girls? You can't even settle on one girl, but you want to come in the hardest industry and settle on one model. That's not going to happen. So how you live your life outside the charts it's going to be a direct correlation to your performance inside the market. So it's just discipline. Like, build discipline outside the charts first and watch that carry over. All right. If you're going to the gym, if you say you're going to the gym this day, go to the gym. Okay. If you say you're going to eat right, eat right. If you say you're going to do this and do that, do it. That way, when you get to the charts, you're already going into trading with momentum. You're already feeling good because you were disciplined outside. You went to the gym. You ate right. Okay. You took care of your fiance and this and that. You handled your responsibilities like you said you would outside the chart. So now when you get in here, you don't want to break that energy. You already got a good momentum going. So why are you going to get in here and break your rules? You know what I mean? So that's it. It's discipline and all that. It starts with how you live your life outside the charts, and then it carries over. But if you're not disciplined, if you're not faithful, if you're lazy, if you're this and that outside the marketplace, it's just gonna show itself when you try to come in here and press buttons. Glad you reminded me, because I did forget. I have it written down, but I would have ended the stream before looking at my notepad. So I'm glad you brought that up. All right, I'm gonna go ahead and save this as a journal entry real quick. Regardless if NASDAQ takes its buy side or not, again, we already said, especially in trending markets, this will occur a lot. So let's drag this down. Let's stretch this out a little bit. Let's take this off and drag this here. And then let's do that. And then this, and then we drag this here. All right, and I think that's pretty much how I want to do it. Screenshot that. And I think that's it. Wait, I want to add this too. All right, taking a screenshot of that. I'll also post that on Twitter. This was fun. This was our last tape reading stream, public tape reading stream of the year. The next tape reading stream on YouTube won't be for another 3 weeks or so. That will be on January. What did I say? Again, check my community tab. I have the whole monthly schedule for January posted. But our next public stream on YouTube is not until January 13th. Okay, I'm taking a break off from December 30th all the way to December 3rd. Okay, so that trading week, the 30th to January 3rd, I won't be trading. And I'm back live trading in the Discord January 6th, which is a Monday. And we're back at it in 2025. So it's going to be a good year. I had a really fun year with y'all. 2024 has been amazing. I still want to do a quick little vlog, sit down video, just like a 2024 recap. But to everybody who subscribed, to everybody who likes the videos, who comments and shares them, everybody who shows much love and support, I appreciate it. I didn't think I would be at over 10,000 subscribers in less than a year. It's really crazy. I still can't wrap my mind around it. Over 2,000 people in the Discord. Okay, it's insane. I love all of y'all so much. I'm wishing y'all a happy new year. I hope you guys spend time with your friends, family. Be safe if you're popping fireworks and all that. Super grateful, super blessed. Praise Jesus. Jesus is good. I wouldn't be in this position streaming in front of y'all, in front of 500 something people. It wasn't for the Lord Jesus Christ. So thank you so much. Happy New Year 2025. Discord is going down. It's going to be a movie. So love all y'all. Be safe. Happy New Year. And I'll see y'all in 2025. All right? Peace.